perfect time of year.
Hey guys, it's Saturday, November 8th, and this is the weekly market analysis video from Craig, the options linebacker. Last week I made the case that charts were starting a longer term consolidation phase or a contraction phase after this big expansion move to the downside. So from expansion comes contraction, but now in the shorter term, just over the course of the next week or two, I think that we're going to start heading a little bit higher. Now, I'm starting today with the Dow on the left-hand side and the Russell 2000, or the small caps, on the right-hand side. And you can see clearly in the Dow that the price did not even come down to the October 10th low before forming a higher low. And in this case, we've already formed another higher high in this case. And I think Friday put in a higher low. Now, over the last few weeks, the Russell really got kind of destroyed because of all the credit issues. The small cap companies just couldn't get financing. So that's why it created a lower low down here after the October 10th low. And all it's been able to do so far is put in an equal high this past week. But I also think that this is going to start putting in a higher low at this point. Let's move on to the S&P 500 and see what it's showing. Now on the S&P 500, of particular interest to me over the past week has been this level at 900, which was the support level that it broke down through, but then just as quickly popped back up again. And this is a very common move to see on these type of breakout levels that are both support and resistance. You'll see the price break up, stretch out, and then come back down to retest from above before taking off again. Now, one of the reasons that I feel the market might head higher from here, at least to the 1,000 level on the S&P again, is because of all the terrible news that we've had over the last month, and it's never gotten this bad before. All the bears could do is just push it down to around the 840 level, and they tried several times to push it down there. The best they could do is do a double bottom, and that was actually only on the futures contract to be able to retest the October 10th bottom before a very strong buy program lifted it back up and above that 900 level that we talked about. What we're also seeing is potentially an inverted head and shoulders pattern set up. So this was the initial move, and then we had, there's the left shoulder, there's the head move, and right now we're working on the right shoulder. So if it does pop back up here, we do have a neckline that's right around the S&P 1000 level, which would be potentially showing a target up to about this 62% fib here. So I know it seems hard to believe that the market would be back up to 1100 again, but it wouldn't surprise me to see 1100 on the S&P by the end of the year. Remember, these kind of moves where we have these huge candles don't create a whole lot of resistance or support. It's really kind of an air pocket. So if the price is able to get above the 1005 level, I think you'd see a quick reach of short covering back up to around 1100, which is the last true breakdown level that we had in the S&P. Now, it might take it a while to get above that 1000, 1005 level. So for right now, over the course of the next week, really what I expect to see is the S&P trade between what seems like now not a very big range, but it's about a 100-point range from S&P 900 to about 1000 again over the course of the next week. Something else that I've seen since mid-September, which I've liked, which supports more of an upward resolution, at least in the short term, has been the VIX, or the volatility index of the S&P 500. So far, all these higher lows have contained this rising trend line, which was broken this week as it popped below this area, back down to the Bollinger Bands. And now what I've seen is on Wednesday and Thursday, we retested. This is called a back test of this trend line, and it's fallen away from that. So now what you could almost say is we put in lower lows and potentially a lower high, which defines a downtrend. So the VIX is now in a downtrend. Now I'll go back to the S&P 500 and talk about Iron Condor positions. I don't have any Iron Condor positions on for November. So what I do have is for December, I've got spiders 117, 119 up here on the top side. And on Thursday, I got filled on a 67.69 bull put spread on the downside. So I have the full Iron Condor position on. Right now, I'm almost in perfect position, giving a little bit more room to the downside than the upside. Things do fall faster than they rise, with a great deal of distance between these strikes. So we've got very, very wide wings courtesy of the high implied volatility right now. So these are almost ideal Iron Condor conditions when you have a chart that's essentially going sideways and you have a lot of implied volatility to work with. So I realize that this is the time after the huge move that we had into early October. That crash was where most people just step aside from the market. Although since I trade Iron Condors right now, this is almost the perfect conditions to trade an Iron Condor that we don't see very often. So it's times like this that I'm liable to be a little bit more aggressive in the face of all this fear in the marketplace and put on more offensive positions. Want to know more? Check out my website and look under the newsletter tab and you can see about my daily newsletter for the Iron Condor. Have a great weekend. Talk to you next week, folks.
I got 20 million.